Ladies and gentlemen, Kei Kim here. Welcome to the Daily Update. Hope you guys had a good day trading. Today, market is down 1.2% on the S&P. Nasdaq is actually held up better today, 0.3% negative for Nasdaq. Semiconductor, pretty much flat. However, Dow got hit along with the Russell 2000, transport, banks, and energy. All these guys got hit today, while the Nasdaq and semiconductor held much better today. Biotech is green. You can see healthcare is down 1.2. Home builders got hit today, negative 3%. Utilities down 1%. Retail got hit close to 5%. Emerging market is green today, 1% positive there. Bitcoin is up about 5.4. Gold, silver, miners up today. It's been a while since we've seen them with the green prints like today. Dollar pretty much flat. Oil same with the treasury bond. VIX popped a little bit. That's interesting to note that the S&P is down 1.2% and VIX is green today. Strange there. But let's deal with the S&P 500 ETF. Spider, 65-minute chart here. So, definitely the benefit of the Dow goes to sellers in the short term. We talked about lower highs and lower lows. We talked about how buyers desperately needed to fill this gap. Well, we didn't even get close to it. You can see yesterday price action, we saw a little bit of move, and then last hour we faded. And then pretty much all throughout the day here today, we came down pretty hard once we lost this pivot. That's prior resistance there. We lost that level, right on the long-term moving edge. We saw a little bit an attempt to make a move here last 4th and 5th hour. Well, that got tanked. And on the last hour, another downturn there. It seems like these short-term traders are these micro-term traders rather, these micro-term guys are trying to find bottom and just bailing at the last hour. That's kind of what it looks like here. See if they can get a quick bounce, see if anything sticks. If not, they're just bailing, and that's what we're seeing this last hour. Selling pressure there, and looks like this one right here. Once this support was lost, you can see that second or third hour, we saw that downturn, and then we saw a little bit of bounce. So you can see that selling pressure continues to go down, and this is exactly what bears wanted to see. Bears may share. Buyers don't even get close to this gap here, this down gap, and with that, bulls are really losing control here. And where it came back to this pivotal low, right? We can see that we got lower highs and lower lows. However, we're currently sitting at equal lows. This is an important level for both bulls and bears because of what the bears need to do. They need to continue to cultivate lower high and lower lows. You can see that we have lower highs. We don't have a lower low yet, right? Lower highs. And that's the low, the previous pivotal swing low there, and we came right back down to visit that low today. We closed right on it. So best case scenarios, this being that pivotal kind of, pretty well identified low. Anybody can see that this is a previous support. This is not hidden. It is not ambiguous. We can all see it. So crazy thing can happen when you're dealing with, not so ambiguous, not so elusive support area like we're dealing with here, 429. Either we can see a gap up from here to retest at least a short-term moving average, some kind of shenanigan up move, or some kind of gap down here, maybe gapping down 427 or so. Just so that bull bears don't have to deal with this support level, right? Knowing that that's the level that everybody can see, knowing that everybody's watching this level, knowing that this is probably the level a lot of people may be trying to even buy that dip. So some shenanigans can happen here, either gap up or gap down at this vicinity. Keep that in mind. Benefit of the Dow continues to go to the sellers. Remember, we talked about this right here. Even when we got up here, if this gap doesn't get filled, benefit of the Dow goes to the sellers in the short term. And you can see this entire week has been truly hectic for the buyers. These gaps still remaining open here. We're still back at this level. right? If we do lose this level to the downside, we have a 422 is the next level of support. That's the next level of that, pivotal swing high. We visited this back in mid-July. That's the level where sellers, bears are looking for. Buyers desperately need to defend this level. Keep in mind though, because we're in the longer term, mid to long term uptrend, right? Overall sense that there another shenanigan you could potentially see is that in the intra hour tomorrow, this thing could get up here something like this in an intra hour, and then towards the end of that intra hour, we can go back up here. So what you might see is some kind of a lower wick with some kind of little body like that, and then you see a follow through on the second or third hour like this, hold above it. That might be the trap for the bears and longs, because it wants to trap the longs, make sure they get stopped out. It wants to trap the shorts, so maybe add more shorts, right? And then it reverses and to at least retest the short-term moving edge, which is at 437. So keep that in mind in this vicinity at 429. Whole lot of shenanigans can happen. If you are too intimate in the micro and the short-term fluctuations, this market will get you. Let's check out that oscillator and see if we can extract any more information. Interesting to note that oscillator is just elevated. I don't know I've seen anything like this in a while. Look at this thing. This is just like not going anywhere. We're just like staying over here, man. We're not going anywhere. I mean, the price definitely made some downturn this hour or this day today, but that oscillator is very adamant about moving, and just moving sideways here. I don't know if it signifies anything at this time. Can this be some kind of bullish divergence? I don't think so, just because this low and here is very, that space in between this is not much of an angle there. But it's strange for me to see that oscillator just kind of hanging around. What I mean by that is only if we do see a shenanigan reversal tomorrow. Let's say we see that something like that tomorrow. If this thing gets up, let's say we see, I'm not saying it's going to happen, but it only would work. Only whatever the signal that we're seeing here, it would only work if we see very fast up move tomorrow. Only if that happens. If not, we see a downturn, this will just come right back down, which I've seen it. But let's just say if we do see some kind of an up move, very, very fast up move tomorrow morning, and let's say this thing gets back up like this, that will be a bullish divergence. At that time, it would be. At that time, you can see that lower low. That's definitive lower low. There's nothing elusive about that. It's not grindy either. It's definitely valley to valley there, lower low here. And if we do see this thing higher low, very, very quickly, bulls can bring it up. That's the only way you can make any sense of this current lethargic sideways movement on that oscillator. If not, it could mean absolutely nothing if bears come back and continue to push lower. Keep in mind, bears are not extreme oversold at the same time. Remember, that's oversold at 369 on that oscillator. You can see right here, 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 meaning bears can still push one more day. So you can see the oscillator just hanging around to see what it's gonna do. If we see a move, we'll see a bullish divergence, this thing will get back up. If we see a down move, this will come right back down to the oversold. It will just come back down and mop the floor here. So let's see how the market plays out. I'll tweet things out on my Twitter and stock tweets account at 2K Kim. You guys enjoy this evening and good luck trading tomorrow.